Hey, market structure fans, Tim Quast for Market Structure Edge. And I want to show you Intel because they reported after the close. And I think it's very instructive to look at what the data might tell you. Forget, in this case, technical analysis or fundamental analysis. One looking at price behavior and patterns, the other looking at financial performance and expectations and analyst expectations and all that sort of thing. And so we're just looking at market structure. Market structure is the behavior of money behind price and volume in context of rules. The market is governed by rules, just like the planet is. The planet has gravity and other aspects of physics that determine and limit what can happen. And the market, the stock market, has a set of rules, principally under regulation national market system, that create mathematical realities for how orders, trades are executed in the marketplace. And so this measure we call market structure sentiment tells us how stocks move from underloved to overloved in context of those rules. And so if you look here, this is Intel, and it's a 3-month view, and the lighter color is sentiment, which is not volatile, and the darker color is price, which is volatile. And the beautiful thing about sentiment is it removes the volatility that prices introduce into the equation. And the basic principle is when things are over 5, they tend to do better. It's not always true, but it is consistently so. There are 2 other rules we use. We say you can buy upticks, downticks. You can buy 1s and sell 10s. But 5 is the best. When things rise back toward 5 and past that bar of the perfect balance of supply and demand, that's a good time to be owning things. And when sentiment returns to 5 and dips below it, now supply and demand are no longer equal. That's a good time to leave. They're always a little bit leading. Well, most times. So here, going even back here. So sentiment for Intel is over 5, and it hit 10 before they reported results for the 3rd quarter, and then the price dropped sharply. So it's a 10. The other little fine-tuning tool that we use is short volume, and if short volume rises above trend, that's a good reason. That's a fine-tuning mechanism to tell you, even if the stock is still above 5, but short volume is very high, leave. It's simple. Just leave. So if it's rising, and look how high short volume is, you can look over on the right side and see that short volume is 55% here. So even if you progressed all the way to here, say, well, it's 10 and this short volume is still way over trend, well, it's a good reason to leave. Then when short volume is very low, as it is here, and then look up here, it's 1 out of 10, and then it returns above 5, and short volume is very low, that's where you come back. And you stay so long as those conditions are true. Then here, short volume, once again, very high, it's over 50%, and it's a 10. Well, leave. And don't come back until it rises above 5, and here it does that again. And short volume is low, and it's still at a 10, and price is rising. Great time to be in the stock. Of course, was aided by an activist. That also was very apparent in the data. And so until one of 2 things happens, it's a good stock to own. Either sentiment begins to drop back toward 5, or short volume rises meaningfully above 10. Not 1%, but let's say 10% above trend. And so that's a great way to remove the volatility that prices introduce and to depend on market structure to help you know when to come and go.